Now, it's interesting to me. I was looking at a report from Monday Morning, the author over there, David Zeller, and he was commenting on sort of what are hedge funds doing here as they went into the fiscal cliff, as they went into sequestration. And he talks about sort of 5 positions that hedge funds had gone long in and 5 positions that they had gone short in. And it's interesting to see how the hedge funds were looking going forward on the short side, or as they, reduced their exposure to companies prior to in the fourth quarter of 2012. Let's start with the short side, because I think it's more interesting. The saying is, don't fight the Fed. That's the saying, don't fight the Fed. Now, it's interesting that as they moved forward, toward the 2012 end, they did just that. They knew that quantitative easing 4 was in place, and yet they still liquidated some of these positions that actually did quite well. Now, Mexico-based telecommunications, América Móvil, symbol AMX on the New York Stock Exchange, institutions liquidated 10.12% of their holdings of that company, and the stock went down 25%. Now, part of that is fundamentally they are about to open up the regulations where América Móvil, symbol AMX, won't have the hold on the market. It's going to be open to other companies, and they'll no longer have that monopoly on the mobile phone business there in Mexico. But here's a company I thought was interesting, Western Union. Western Union is used by a lot of people, especially people that don't have bank accounts, and yet they were selling out Western Union, symbol WU. Now, Western Union, if you don't know, they are the biggest in the money transfer business. And the institutions reduced their holdings 8.8% in the fourth quarter of Western Union. Now, here's one that they probably wish they had back. Taiwan Semiconductor. Their ADR on the New York Stock Exchange is TSM. Now, that's interesting. They sold off 7.62%, but those shares have actually, started to turn around, and a lot of people think that the semiconductors could pick up. Now, here's one that I actually bought, is CVS Caremark, symbol CVS. They dropped 6.6% in the last month of 2012, and CVS is already up 11.52%. So you got to remember, they either dropped it or went short in CVS going into year-end. Now, I don't know long-term why they would do that, because as you get the aging population of baby boomers, to me it makes absolutely no sense to lower and drop CVS. It just doesn't, I have a hard time making sense of that as they did that. And then the last one, Schlumberger. He trimmed about 5.25% out of the institutions. Now, it's not that institutions are all right. A lot of people follow institutions and say, well, I want to be a contrarian to the institutions. But I do think it's interesting as to what sort of there were top sellers and the top buyers. Now, let's talk about the top buyers. This is interesting to me because here you've got hedge funds out buying an ETF. Now, you could see what they clearly were thinking at the year end. They were buying the iShares, MSCI Emerging Markets Index. The symbol on that's EEM. And I think the idea is that you've got to go to where the demographic growth is, and you've got to go to where you can get paid enough for your risk. And I think that's where they went. I think they went to go get paid for their risk, and that's why they moved into that emerging market fund. And they put up 7.33% was the gain for that fourth quarter. That's how much it went up, was 7%, the ETF. Hedge fund ownership, though, doubled, 103% in that quarter. So you had hedge funds really going into that ETF. Also, Facebook, institutional ownership from hedge funds went up 93%. The stock went up 30%. It's a simple story on this. If the bankers and investors liked it at 40, you got to love it at 18. And to me, that makes it, really easy So, with all that going on, they also had UBS, which I don't really get. I wouldn't do that with Ford Motor Company. I like that they stood on their own, and the fleet of American cars is getting older. And then finally, AIG. AIG is a big company. They've got a lot of assets. Only thing is what do they do with their premium money in this market? It's hard to put to work, 2 or 3%. But anyways, this is George Jarkesy. Do not touch that dial. It could cost you money.